Stocks to buy now, we've got Facebook stock, Square stock, Zillow stock, gold moves, and of course the jobs number on Friday that the market is looking forward to. So let's start off with Facebook stock, and unbelievably Facebook jumped 6%. Why has it jumped 6%? Well, Facebook launched Reels, which is supposed to be a complete copy basically of TikTok, and we know what's going on with TikTok right now. So Microsoft still negotiating the sale of TikTok, and well, analysts think that that is mostly a positive for Microsoft in general, and Facebook launching the complete competitor. Now, it's not exactly the same. Reels is going to be within Instagram, but it is exactly the same as TikTok, so you can do dances to music and you can have some AR things in there. It really is exactly the same as TikTok. And the reason why Facebook stock is up, not just because the Reels could actually just offer more monetization options for advertisers, but obviously with everything going on with TikTok, there may be some moves away from that because the situation is still unclear. Does that really warrant a 6% rise in the share price? Not in usual times, but it is all about tech right now in the stock market. Really the only sector, or one of the only sectors, that is just having money poured into it, and it will continue if the situation in the economy stays like this with all of the negative real interest rates. Let's move on to Zillow as well, which is another tech stock, of course, up 11% yesterday, so now valued at 16 billion, and they made a loss, but the loss wasn't as much as analysts had thought. So they reported, well, their numbers were basically flat. They lost a little bit per share, 17 cents a share versus expected loss of 48 cents a share. So they actually beat the expectations by quite a fair way. Now, Zillow is an online estate agency. They're an online database for real estate. And obviously with the move that everyone is making online now, they're just seeing more users, and obviously their numbers are better than expected. And the CEO said Zillow's second quarter results are even better than we had hoped, and firm up our belief that powerful tailwinds in both real estate and technology are rapidly converging with Zillow at the nexus. And yeah, I would agree with that. Definitely people are moving online. And it's not just people that were online already, it is all of those consumers that weren't online, weren't going to be pushed online, and now they are having to go online. And really, the big thing is, are those people going to stick online? Because doing things online is more convenient. And so those people who were maybe late adopters have now realized that this is the way forward, and there are a lot of tech companies definitely benefiting from this, including Zillow, also payments, TV streaming, but 280 million average monthly unique users for Zillow, which is up 12%, and again, a very strong move upward for the share price because of just all the money that is pouring into tech right now. And let's talk about gold, because gold has hit fresh highs once more, and gold is really as another asset class that people are pouring into. So gold would traditionally be thought of as a hedge, and that is just not how it's behaving right now. So why is the stock market up? Well, actually, if you look at it, it is tech. The NASDAQ is way outperforming the S&P even, which is heavily towards tech. And money is going into growth stocks, growth areas. If you look at value stocks, they really are underperforming because the outlook for them isn't that great over the next few years. And that extra money cannot all pour into the stock market, into tech stocks, and that's why gold is behaving more like a cyclical asset, behaving more like a stock right now. And so you're seeing the price rise incredibly. GLD, which is a gold ETF, saw $1.7 billion of inflows. There is incredible money pouring into gold right now. It is behaving like a risk asset, and it is just one of those, along with silver, which is being bought into because of other value stocks like financials with negative rates. They just can't really make much money, and so the money is pouring out of those and into commodities and possibly industrials as well. And we move on to Groupon, which saw a 37% rise in its share price yesterday, and they lost money as well. So they lost 93 cents a share, but that was way better than the $2.75 loss that was expected. Revenue $396 million versus $183 million expected. And that is a very good result. Even though they're still losing money, it's a good result. And actually, if you look at Groupon stock, it's had a really torrid time of it. Started the year at $60 and is now $16. So that really is the reason for the rise. $60 stock at the start of the year, sold off, really bad numbers. A lot of people probably shorting the stock, going short, trying to benefit from the price falling. And so that stock really just falling off. And then they post some fairly good numbers and you're just getting people probably buying back their shorts or just getting out of their positions. They've made their money. It seems like the company may be turning around a little bit or benefiting from the situation in a lot of other tech stocks. And so those traders really just getting out of their positions. A short squeeze, you might say, but better than expected numbers for Groupon for sure. And let's move on to Square, which has been in the news over the last few days. Their Q2 results actually got leaked a day before they were supposed to, and they were very good. So we talked about it on a previous news video about how really it is online, the Cash App part of Square. So Square has the physical infrastructure and software services for SMEs, but they also have Cash App. Cash App is really the star, the jewel in the crown for them. So we have some banks and analysts upping their targets from 153 to 188 for Argus Research. KeyBank raising to 165 from 140 previously. Canaccord raising from 80 to 180, and Bank of America raising their price target from 84 to 100. Stock currently trading at 154. And Bank of America, a previous target of 84 and it's now 100. Canaccord almost doubling their price target, which means they must have been really wrong before or maybe just not with it. But certainly the price has had a very strong move. Again, a tech name will be having a strong move right now. Their gross profit up 167% year on year. The stock was up again 5% yesterday, which is crazy. Their revenue really going through the roof. And the revenue really was high because they had way more than expected Bitcoin growth. Now, Bitcoin can be sent through the Cash App, and that is really a growth area for them. So people are using Cash App to send and receive Bitcoin, also cash as well. It's a bright part for them. The SME part of the business, the payment services for mum and pop shops, has really not done that well, obviously, because a lot of those shops are closed during the health situation. But it looks like a strong business, and most analysts are upping their target on the stock. And we finish with the jobs numbers that will be coming out on Friday morning US time, and the stimulus package. And you can't really have the latter without the former. Looks like regulators are looking for the jobs number before they make any real decisions, and nothing has been decided as yet. Apparently the Republicans are proposing $1 trillion in stimulus. Democrats still stuck at $3 trillion. Probably going to be somewhere in the middle of that. Right now, $600 stimulus package per week probably isn't going to budge from the Democrats, but the Republicans maybe want closer to $400. In terms of the job number, the range, the expected range is just massive, absolutely huge. Some saying that you're going to add maybe 1.5 million jobs. Really, the number is going to influence how much of the stimulus package is going to be given. So Citibank saying we would expect a larger market reaction in the event of a weaker or negative job growth in July, as it would call into question the so far strong rebound stories. Also, Jefferies saying there are a lot of signs net hiring is not very much. That's not very good. So the jobless rate expected to be around 10%, 10.5%. And obviously the stimulus package is going to change depending on how the economy is doing. If the economy is doing better than thought, obviously the stimulus package can be reduced. And if it is not doing well, jobs are not being added, it looks like the stimulus package may have to be increased further. And we finish with a question: what do you think the job numbers will be? Do you think the economy is starting to start back up in the States, or do you think that no, it isn't, jobs aren't being added and it looks like more stimulus? Let me know your thoughts in the comments. That's it for stocks to buy today though. Thank you for watching, and I'll see you in the next one.